I'm ready, TJ. All right. Well, yesterday there was that attempted reversal in the latter part of the day. It was a decent try, but I don't think this is it. I think it's too early to tell. And so things are up here today. CPI news, markets jump, and so on. Whether this is going to be the low within this pullback, I don't think so. But we'll see how today ends. Anyway, as we look at what happened yesterday, and we look at, was this an across the board reversal where the probability of this stabilization happening is a point where we want to consider, like here, this low. And how do we do that? Well, any turning point where prices are pulled back, which you can see here, or even on the upside, many times you're going to get an accelerated move or a range expansion bar. And you see these prior moves down here. There was a range expansion bar and a giant 180 reversal. And on this move down, there was a range expansion bar. And on this move down, was a range expansion bar. So in comparison to here, we don't have any range expansion bars. They got a little larger on the move down where we had that bearish reversal day that took out the highs and whipped back down. And so I'd really like to see some type of a range expansion bar, which communicates, capitulation, just that type of massive type of selling. So, and should this day, and I'm thinking too far ahead, but I'll share the thought because it's what I'm thinking, is that if this day ends negatively, I think that is what will drive prices lower, because this attempt to turn yesterday shouldn't be discounted, or to say this is impossibly could be, but it's got to prove itself now. And how does it prove itself? It's got to close up in here, by the end of the day. It's got to push up into this area and close up there. So if by chance this turns out to be near the high of the day and it reverses back down, well, this happy bar here, little buying frenzy that occurred on the CPI fails, it's negative. Close of 44.85.95 for SPX, McGraw, or the futures? SPX. Well, let's take a look at SPX. Let's take a look at a few things here. So this type of a bar, okay, is slowing momentum. It's neutral. The opening close are about the same. So it's a small candle body with tails on the back and forth. Things have to calm down. The hourly chart's in a downtrend. So that reversal at the end of the day did really nothing to turn that around. So 44, a close today at 44.85. I don't know, 85.95. Well, if you're asking if it closed that way, would I believe this is a turn? It would lead me to believe that more than I do today. To be able to retrace up into this area and stay up there. Why? Because it would take a relatively long distance to get back down to this low. So retracements are one technical analysis concept. You have to put that information in the context of the trend and several multiple timeframes to how significant is that. Now, the significance of being able to close up in this area would mean that yesterday's low would become a very important reference point at this time, not to violate that. So we'll see if it does close up there. And it's what I was saying before is, when we're looking at the S&Ps was the same thing, and looking at a different chart. If it was able to close up into the area where I was pointing to, that would change an opinion as to this low being something that could hold in the short term. And then we'll see. So we would then, we'd have a move up here, let's assume, and based on that, it really wouldn't violate the trend, but the depth of retracement would lead us to believe that we'd see more of the beginnings of a trading range short term. And I don't think that it would suggest it's going right back up to the high by any means. Does the tail count on filling the gap? Well, I was saying this yesterday in the room. I was saying exactly that. I said, the S&P is coming down into this area. I said, let's look for this to make the turn here. So it didn't quite get there, which communicates that institutions were willing to step up a little bit ahead of it actually filling the exact spot. And they came in, earlier than that and turned around. And, this was that huge tail bar there where it spiked down and came right back up again. And you see this reversal down here. So I talk about, accelerated moves and range expansion bars pointing toward a low. And of course, it's relevant on a 5-minute, but, we don't have that on an hourly. So we'll see. But this kind of a bar, even if it does go up, I would suspect there'll be sellers up there, up in this area. They knock it back down again. And that would be part of what we would look for as a bottoming process in this area. So, we'll see how that unfolds. And Qs, same spike up there. And, how far can this retrace? Getting above this high, we see that there's a void. There's nothing there to the left to stop it from going up. So now what do we do? Well, simple, factory work. It cleared resistance. What was resistance should become support. It says, okay, if it pulls back here, buyers should want to step up and try to make it turn here. Or if it's highly bullish, there's much more demand, it won't pull back that far. That brings in the concept of creating support. And what we would see on a minimum on a 5-minute chart is this creates a pivot. A pivot, what's a pivot? Well, pivot high, 3 lower highs to the left and right, or pivot low, 3 higher lows to the left and right. It'll pivot and create support where there is none. And then we would look for a retest, see if that goes back up. Can it come back here? Which leads to, hey, how far up can this retrace into yesterday's whipsaw bar and actually close up there? Getting there is one part of what to look for. Staying there is another. Russell, that is a much better looking day. Right? Pulling back into here and, a decent close. It cleared the highs. It has the ability to move up. Overall, things are still messy. Someone in the room used the word treacherous yesterday, which I would agree with. Things were pretty whippy back and forth. So when there's uncertainty, right, prices whip back and forth like that. And yes, they are treacherous. So if you're going to trade during treacherous times, you better be nimble and, or stand aside and wait for things to tighten up. It's a choice. Dow came down the hardest last week. It came to the prior pivot low. As always, we look to the left. It began to stabilize. That was a great hourly chart down there, bottoming tail bar. whipping back down and coming back up again. So how far can this get up? Can the weaker bring up the rear and come up here? What'll happen? It hits the 50 MA, which is widely followed. And so we build reference points with our pre-market analysis as to, what do we have? What can possibly happen? What does that mean if it does happen? And then we decide to trade what is. All right. Bitcoin up here a little bit, been whipping around a lot. And, last week we talked about this move down and whether this could create enough support to move up into the void. And clearly it failed to do that yesterday. But now this depth of retracement right back up here opens up the door to that thought again. And so bar by bar analysis is a concept that we use to force us to move our thoughts and analysis based on what is, not get stuck in the past. So while this looked, like it's going to go down, this, obviously very negative bar and staying in the lower half, and then it pokes down and it's come back up again. Well, the downside at this point, it has been neutralized. It's not done, but the depth of this retracement back into this resistance forces us to think, well, if it can hold up here, right, absorb the supply, another MTS concept. What does that mean? Well, it means bullish price action. What does that mean? That means it goes sideways at resistance. And when it dips down, it forms bottoming tail bars or red bars being ignored. And when we see that evidence, that creates a bias that clearing these highs should result in a move up. And it doesn't matter whether it's Bitcoin or IBM. Looks like 550 is going to cross the 200. I don't know about widely followed thing. It's something that's talked about as a golden cross. It's very subjective. I've seen golden crosses result in death crosses, and I've seen, this type of thing result in moves up. So look, we call moving averages visual aids, right? So these things have been grinding up. You can have a 50 MA cross up through 100 after 200 after prices have been rising for a while, and they could be at resistance, versus the MTS common sense approach that says, hey, prices were going sideways for a while and the 50 MA was coming down and the 50 and the 200 maybe converged. And now on an explosive move off of a low, the 50 crossed the 200. Well, the price action is supporting a move, a bias to go up. Just the thought of a 50 crossing a 200 is what just kills individuals, traders, and investors with a concept that is talked about in the media that they really have no real knowledge of how to use it intelligently. Right? So just those moving averages crossing, like any moving averages crossing, can be meaningful or totally meaningless. You have to know how to read the price action. Oil looking good. And one of the best looking sectors yesterday was oil, right? Which I think should continue. I'm going to show you some gold stabilizing here, but whippy. Silver and gold did pretty well yesterday, but they're probably not ready for prime time yet. Transports, at the bottom of the range and holding there. And interest rates just doing nothing for a while. I'm telling you, keep an alert down here to see if they poke lower or poke up. It'll have an influence on the market. But as far as how the markets did yesterday and turned, and we could look at a minder and see what was up and down yesterday, or just look at a bunch of charts. And from a very broad-based perspective, these are all the S&P ETF charts and then you look at what happened yesterday, this is a pullback into an area where a turn could occur. It's not confirmed yet, but look at XLE. Right? So we recommended XOP, but XLE, which is much broader based, the converging moving averages here, and this stabilizing and turning up. And so this looks like it could bring up the rear. It's been stabilizing here for a while. But look at healthcare breaking down. This is just a mess. Consumer staples, real estate came down hard. It's in support. Utilities are a mess. Look at this wide range bar and a tail on consumer discretionary. So overall, things are just a mess here. So don't get too excited about this market right now. We need a little bit more information before, let's say, we willing to press the accelerator in a more aggressive way. So, all yours, Dan.
Good morning. Yeah, nice little pop there. Pre-market on less benign CPI is what what got it going. So all our opens are fine. Not many earnings. Oracle, we were watching last night in the green room. Gapping down here, 85. That's a big gap. That's a big gap. We were talking in the room. One individual wanted to maybe buy a long strangle, which means out of the money call, out of the money put. And we had a long talk, and I said, that's 100% fine. You're gonna win if the gap is bigger than the volatility crush. And it's hard to estimate what that's going to be. I kind of compare it to the expected move. The expected move was $5, but that's by Friday. So this is so $3.50 gap down. That's like a big percent of the $5. So I think it would have been profitable had he done it. So let's RBSTZ. Has to get over the red bar, and then yeah, it's a bottoming pattern. Little downside shakeout, 20 MA flattening out. So sure, today's Tuesday, so over Friday's high. All eyes are going to be on Apple Day. They're unveiling their new products. People love Apple. Had a deep retracement here, but it's still in an uptrend. Daily, weekly, monthly. But it's a nasty 180 reversal on the weekly. So, there was some damage on the pullback, but that's right here on support. Open, ugly gap. Down here to these overlapping bars. We'll come back to it. Bigs, $41. That's an ugly gap, but no good pattern. HLF. Oh, what's up with WIN and LVS today? I just saw them cross my ticker. Those are both getting whacked. Let's keep an eye on those for call spreads. Yeah, that's ugly. See back. $64. This could be a call spread also if it can't bounce, or maybe 30-minute low. Another bottoming pattern here, and it's a gap up from a bottoming pattern. I put it in this middle window right here. So 30-minute high. That looks really good. Bottoming pattern. CPE. This was an oil stock on our list yesterday. Yeah, we gave XOP gapping up $1. That looks great. And another oil we were watching, Sierra Mike. And we also gave Bravo Papa bottoming pattern here, all these converging MAs. That's up pre-market, looks good. And Jemiah, I haven't looked at this stock in a while. Now, could this be the start of a bottoming pattern? Sure, it could be. Got 100% retracement, 20 MAs flattening out. If this closes strong, then it's making a higher low right here. So that is worth watching. SDC. Somebody told me the Reddit boys were playing with this yesterday. Look at the volume. I was watching this to see this would be a beautiful 1, 2, 3. But Matt's saying Delta variant taking a toll. Yeah, but here's the problem I have with that statement. Matt, I think I'm just 99% confident there has to be more individual bearish news on LVS and WIN other than the Delta variant. Why? Because the gap is so big. You know, whatever percent that is, like just eyeballing it here, 39.50 to 43 and change. That's like 9%. So the Delta variant has already been in the news. So yeah, so Robin, that makes more sense to me. That makes total more sense to me. I didn't take the time to look it up. So you just did it for us. But yeah, that makes sense. Yeah, we know about Delta because look at jets. Jets and cruise ships look horrible. Actually, RCO, little downside shakeout. That looks better than jets. All right, let's watch RCO actually. I'm gonna put that in a window. That's you know, I don't know. Could this be? I don't know. That is just so sloppy. But the fact that it retraced this much is kind of impressive. But that's sloppy as can be. I think the Reddit boys were playing with this yesterday, gapping up again. $3.50 on a $9 stock. That's another monster gap. But look at the monthly. Somebody in the green room gave this to me at the end of the day. I sure wish I saw it earlier. Nice. See, so do you know when we say we talk about a something bar? This is an example of a bottoming pattern. That's an example of a something bar. That is the biggest green bar in the entire 3 months of data that I'm showing you there. That's I'm putting that in a window. So this, you could do a half lot over yesterday's high, or let's watch some type of little pullback, or 1, 2, 3 would be even more ideal. Gapping down 36.50. This could be a call spread. And maybe 30-minute low. I like that. Oh, Vimeo. Greg, I didn't know they went public. Yeah, this is Vimeo. And Greg, another piece of news of vendors. I saw today that Intuit is buying MailChimp for $7 billion. Huh?
Would they buy?
MailChimp.
Yes. I saw that email.
$7 billion. Wow, I didn't know that little monkey. Is that politically correct? If I call MailChimp a little monkey? That little
You said it-
monkey.
If you said it, Dan, it makes total sense.
All right, cool. That little monkey was worth 7 billion. Wow.
They're big.
Wow. All right, this I think had earnings. Wow, that's actually a big gap up percent wise, 10%. But that's kind of a 1, 2, 3. SEAC, that's one of those shippers. MXCT is gapping down. I just don't like the way that trades at all. I don't want to either. See, if something just gives me a headache just by looking at it, I hit the delete button. Could be bottoming pattern. You know, maybe 30-minute high, but there's so many other better patterns. HLF with gapping down, 49 bucks. That's a big ugly gap. Wow. You see why I don't really care about the percentages? Because I just look at how big it is relative to the candles. And that's a nasty gap, engulfing all these breakout bars. FCell 618. Remember I mentioned the something something bar. That thing needs a lot more help. A recent IPO also in a downtrend on the 15, still looks lower. MMAT. I'm going to set an alarm at this, just like right up here at 550. MMAT. Remember, semis have been strong, and we were watching Oscar November. That's gapping up here. That's just churning up. That's bullish daily, weekly, monthly. Morgan Stanley is bullish consolidation above the 20. That's worth watching. Lumina. Lumina. Okay, so the something something bar here as a bottoming pattern, it's kind of reverse heading shoulders, left shoulder, right shoulder, head. And it's a red bar ignored, which we call this a bear sandwich. You got bullish wide green bars on the left and right with the fat red meat in the middle. So if this takes out, well, tick is 1,000. So if this takes out yesterday's high, I like that. TT, I had an up alarm go off. We're short this, but that looks like a bad tick. Then we're short Zen, it's relative weakness. LBS is selling off. All right, so that looks good. We're short Zen. That looks good. Let me go ahead and tighten the stop now. High 116, 116.22.